All right, we're going to get started here. Welcome. People come in late, they come in late. If you have questions, if you can figure it out, you can chat me here. If not, here's my email. You can email me as well at melissa@thestockswoosh.com. But I think it's easier to chat in the room. Oh, there's Rick. That worked. I got a hi from Rick. Perfect. So I'm here today to talk to you about making money trading momentum and gaps. It's a very interesting time to trade. Trump is meeting with President Xi this evening of China. It's going to be a crazy couple of days here in the market. It's earnings season right now. We've had a lot of momentum, some things to the upside, some things to the downside. But we're going to talk about momentum today. For those of you that don't know what I do, I trade, and I also talk on TV, and I talk about the stock market, I talk about the economy. If you're interested in trading with me and taking my class, which I will talk about in a little bit here at the end, you can email me at melissa@thestockswoosh.com for sign-up forms. You can call me at 929-3200-GAP. You can also follow me on Facebook, X, or YouTube. And again, I've been trading for almost 18 years. It's hard to believe. It's really hard to believe now. And I've been trading nothing but gaps, but specifically I'm trading momentum in the gap, which is what we're going to talk about today. And again, any questions, you can choose my name in the chat box and type directly, okay, for anyone that's here. Anyways, getting back to what I was saying, when I started trading, again, long time ago, I wanted to do it as a full-time job, but it's unlike a full-time job where it's not like you just start and immediately you're making money. You have to learn what to do in order to be successful and make money. A lot of people are trading, a lot of people are losing, and a lot of people don't know what to do and are back and forth constantly, winning some, losing some, and in the end losing. I knew very early on when I started trading that if I could just find one good trade a day, I'd be perfect. I'd be able to make it. And I just had to develop a strategy in order to do that. And it took me 3 years. And now I'm doing it for, like I said, a long time. And I teach a class once a month where I teach people my method and strategy. And I think when you're doing this, if you decide you want to do it, again, whether you're doing one trade a day, trading for 10 minutes in the morning, trading all day long, you have to take it seriously. You have to take it seriously no matter how much time you're spending with it, because if you don't, you can lose money, okay? And again, same thing goes, you can make a lot of money very quickly if you take it seriously, which is what my goal is really, and my motivation every single day. So trading is a real job if you take it seriously, but you must have an edge to be successful and to make money consistently. So for me, I developed a system based on gaps, and I actually focus on the short side. Now, I will go long. I went long this week, but I prefer to short, okay? And I found that a lot of traders don't know how to short. Also, a lot of traders aren't good at shorting. So I developed a niche for myself, really focusing on going to the short side first. And, you know, I'm always looking for the biggest momentum move, but I do prefer to short. And the reason I prefer to short is that stocks fall faster than they rally. It's just always the case. And again, I found that it's an advantage to know how to short, because a lot of people don't know how to do it. But knowing what to do and when to do it is very important, especially in today's markets. Kind of interesting looking back here, went long the market this week. We had a gap up in the market here this week. And again, let's just go over very briefly here. What is a gap? A gap is the difference between the close and the open. So the stock market closed on Friday at one number and opened Monday morning at a higher number. And I went long the market. Now you could have gone long a day trade. You could have done a call. Could have done both, okay? Market continued up. Now, again, I don't know exactly where we closed today, but this is a good example of momentum. Momentum what? To the upside, okay? So the market got bought this week. Interestingly enough, though, I shorted a couple different times here in the market, and we'll talk about one of those trades today. Here was a great example. Again, this is momentum what? To the downside. Market fell here. Seems like 100 years ago, but it was less than a month ago when the market had a big red sell-off bar. So knowing when to do something and what to do is extremely important, because again, if you had gone long here, you would have lost. If you'd shorted here, you would have lost, okay? So you have to think like a professional. Again, it can't be like a 50-50 crapshoot. You must have a reason to take the trades you're going to take. You must have a reason that you want to risk the money. If you don't have a reason behind it, you're going to lose. If the reason's good enough, then you should take the trade. And you should feel like this is worth the risk to reward. And that is how I go into every trade I take. I'm saying, wait a minute, this is going to have a big move. And therefore, I want to do it. So big moves trading momentum for big money is, again, my focus every day. Market's a good example in, again, two different directions. But when I trade, I'm looking for momentum. This gives me an edge, and it will give you an edge. So momentum trading is one of the most profitable and fastest ways to make money trading. Learn how to take a position in a stock in anticipation that the stock will have an explosive move. These enormous moves happen in one direction, and they can happen very quickly and very fast, okay? And they do. Momentum trading is very profitable. And that is how you can make big money in the market, whether you have a small risk or a big risk, okay? So again, the size of your risk, your dollar amount per risk, should be equal or close to equal in every trade. That will depend on, obviously, what? The size of your account. You can't, risk more than you can afford to lose. That's the same for everyone. Now, if you have a small account, your goal should try to build it. And even if you have a big account, your goal should be to get the system down, understand what we're doing so that you can move forward and still grow that too. Again, we were talking about momentum. This is a long that we did this week. We did NVIDIA. Stock closed here, gapped up. NVIDIA had a monster move this week. So again, I'm just going to go back. This was Friday, and then Monday, NVIDIA gapped up, and then Tuesday, it flew like the dickens over 200 and then pushed up today over 210. I think the high today was 212 and change or something. So again, what happened with NVIDIA, it had a big momentum move to the upside. So again, whether if you did one call or one contract, or if you went long as a day trade, we did both, you would have made money. Again, if you were shorting this, you would have lost. So here was the day trade we did actually today. We went long NVIDIA today. Entry was 207.90. Exited, I was looking for 210. And again, it kept going. 210.20, this was a day trade. You would have needed a margin account to do this trade. I'm showing both sides of this, an advanced trader risk and a beginner risk. I'm saying a beginner risk, which is an average of around $1,000 a trade, but you could have risked less. You could have taken half this size. You could have risked $700. You could have risked 500 shares, okay, and made over $1,000. So if you would have risked $1,400, you would have made $2,300. Now this is a margin trade. What happened with NVIDIA? Gapped up, closed here, gapped up. We entered the trade, got the move, boom, and I got out. It was a nice move up. So this was a day trade. So we ran in and out of this in less than 10 minutes today. This is a 1-minute chart, and this is what I'm really very good at doing. So when I day trade, I'm in and out of trades very quickly. I love doing that. Then I can do whatever I want to do the rest of the day. Again, I'm in options in NVIDIA from the last I was in options in NVIDIA through the last 3 days here. But again, that is slower trades, taking my time, getting the bigger move in the trade. So I like to do the day trades because I like the fast moves. I like to do options because I can get bigger move with options, which you can get sometimes on the day, which was the case yesterday, or overnight at the gap, which the stock closed here and gapped up overnight in NVIDIA. So again, if you had a small size or a big size, this was a big move. And again, you could have taken less, but you would have needed a margin account for this. Any questions about that? Any questions about margin account? I see some people coming in here late. If we're already started, I don't know if anybody has any questions. Again, if you want to chat me, you go to individual user. You have to choose my name and then chat. Okay, I'm going to keep going. So we're talking about momentum, but what creates the momentum in stocks? Big money. So you want to look for the footprints of institutional money. And again, NVIDIA is a good example where people were buying the stock. It would not have had a move like that fast, that quick, and overnight without buying, okay? So again, big momentum. You also have selling, okay? Selling comes in, and again, we're going to talk about some short examples, but we shorted the market when we had that big fat red bar, and institutional money dumped and sold positions, and not just in the market. Again, that was back in early October, other stocks as well. So in that case, momentum was to the downside. So again, institutional money equals big money, lots and lots of money. That's what moves stocks. That's what moves the market. So you have to learn to trade with it. So again, a lot of people want to trade gaps for gap fills. I do not trade like that, and it does not work as a way to consistently make money in stocks or the market. So I'm going with the momentum. Now, can I do that with every single gap? No. I developed a system and a criteria. It's a 26-point criteria, which I go through, and this is what I teach in the class. If I go through my 26 points and it rates 20 points or more, I will take the gap in the direction of the gap. So you cannot go long every bullish gap. You cannot short every bearish gap. If it was that easy, I'd never lose. Nobody would ever lose. It's the idea of trying to find the highest odds in your favor, and that's why I go through the points, okay? Because I'm trying to find out who's in charge. Again, who's in charge, the bulls or the bears? Well, this was very easy. We're looking here. This is the 10th of October, just a big fat bar. Good example, the bears were in charge here. Again, had to be short that day to make money. Again, Monday, we rallied. The bulls were in charge, clearly. Gap up, closed green, solid. And then here too, that was Monday and Tuesday. So again, if you're wanting to do this, first of all, you have to make money on a regular basis. You have to have more winners and losers. I know that sounds simplistic, but it's just the facts. A lot of people keep trading, and they will stay on top of something even if it doesn't work just because a couple times they made money doing it. You need to have something that you're doing and using as a system and a strategy that works more than it loses. You got to have more winners and losers. It's not about getting something to a piggy target all the time. It's about finding something that has a high odds of working where you'll have higher or more winners, and then you'll have some big winners because you're going to be in the trades. Again, the day the market sold off was one of those examples. But I'm following the moves that institutional money makes in the market, and then I'm capturing those moves in a small time frame on the 1-minute chart. Now, if you want to do options, that's fine too, okay? I'm still trading the gap. I'm still trading the gap. I'm still trading with institutional money. I'm still trading with the momentum, okay? Makes sense? Any questions here? I see some people coming in late. But again, speaking of institutional money, let's talk a little bit about shorting. Now, why do I like to short? Again, I love fast moves. Most day traders, most retail traders actually prefer to go long. I guess the buying low and selling high, people can grasp their head around the idea of the concept of going long. They want to go long with the market. The market's been very bullish this year. It's made a lot of brand new all-time highs, but you can short stocks in a bullish market and a bearish market. It's very difficult to actually go long stocks in a bearish market if in fact the market turns, which the market has had different periods where it's turned. I know everybody's remembers, has a short memory, but again, we sold off very, very hard in February and March into the beginning of April with all the tariff stuff that happened at the beginning of the part of the year. And again, we were short that. We made a lot of money during that period when that happened. So again, it's beneficial if you know how to do both sides, long and short. But a lot of people don't know how to go short. Most people are focusing on only going long, and then they get burned when stuff goes against them. So again, I found that it gives me a niche to focus on shorting. I got a lot of opportunities under any market conditions, and then the moves happen quickly. Now, this is a good example too. This was Apple. This was 1022. We shorted Apple. Again, what happens when a stock falls? Again, the reasons for it, I don't really worry about it, concern myself, but when a stock falls, panic comes in, fear. So that's why it happens like that, out of nowhere, quick. Here was Apple. Stock closed here, gap down, fell off a cliff. So again, this was the open of Apple on October 22nd. It was above 262, and again, fell off a cliff, fell all the way down almost $10, not quite, broke 255. This was a monster move for the stock to happen just in a couple of hours. Just in a couple of hours. Again, this is 9:30 and 1:45, and look at this. Wasn't even 6.5 hours, wasn't even the whole day. And it fell and collapsed. So again, what happened that day with Apple? It sold off. Okay, it fell. It crashed. A big flow of money going in a certain direction is what moves the market. Stocks, creates momentum, and sets the trend in charts. So what happened with that Apple that day? Again, the momentum was to the downside. When you're looking for institutional money, you're really reading the side of power in a stock. And if you can trade with that side of power, even with a small size, you're going to make a lot of money. You want to be on the right side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it is. And this is what's so important for people to understand, and particularly, like I said, in any market conditions. Any questions here so far? How's everybody doing? Again, in order to ask a question, you have to go find my name, chat to me, choose the new chat, and type. Anyone have any questions? Everybody okay? Rick, we can talk about that at the end. In fact, I actually do think I have the BA chart in here, Rick. Actually, I think I have it in here. We can talk about it. Okay. Becoming a successful trader and investor requires becoming a specialist in defining where the institutions are buying or selling a stock. Learning advanced technical analysis is required. What does this mean? It means reading price action and charts. So when I trade, I'm making decisions based on advanced technical analysis. So comprehending how to read, define, and trade with this power will have a huge positive impact on your profitability as a trader. And again, you want to be profitable. It's fun to trade and it's fun to sit at a computer and go into a chat rooms, but if you're losing, that's not fun. Making money is fun. Elevate yourself, your trading, your profits to a higher level of consistency and success by learning how to read the footprints of institutions trading in the market. So again, I'm not going to predict the gap. Like, I have no idea what the market does tomorrow. It could gap up, it could gap down. But I see the gap and then make a determination if I want to go long or short it, and if I want to do an option or a day trade or both. So if you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. Again, part of trading is taking the profits out. It's not just taking the trade and just letting it sit forever and ever and ever. You got to take it, get the move, book it. But you have to understand how to trade with the side of power. It's very, very important. And you need to know how to find it. And again, it is very important to find it because the power has the ability to pay you. It's really the only way. I'm convinced now, as long as I've been doing this for almost 20 years, the only way to make money as an individual day trader, it doesn't matter if you're trading a small, medium, or large side, is to trade with momentum, because you're never going to move a stock. And no matter how much size I take, I'm not going to move a stock either. Big money is the only thing that can move a stock. And again, the market does have the ability to pay you. These moves that I'm talking about, that I'm showing you, happen all the time. It's just about finding them and picking them and getting in them before they happen. Anybody can go back and look at NVIDIA now and say, oh, it just moved blah, blah, blah percentage in 3 days. We were in it before it happened. And that's how you make the money. So knowing how to read what institutional money looks like is essential to becoming a successful trader. You can win big trading on the side of the power. And again, how do I do this? I do it in the gap. So again, let's just talk about the basics of what is a gap. A lot of people don't know what a gap is, but a stock gap, so when the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. Okay, so we did the Apple puts. Again, you can short a stock, you can buy a put. We did the Apple 250 puts, 10-9. Again, this is the options newsletter. If you want to sign up for this, you get the trades emailed to you in live time and you do it. So here was the 9th. Stock close here, gap down. Apple fell, followed through, fell off a cliff. Okay? And this was, again, 10.9 into 10.10. It was dirt cheap, $1.70. So again, if you did an advanced trader risk 70 contracts, 9,100, sold at 650. You could have made $36,400. It was a 400% return on investment. Just a beautiful, beautiful trade. If you risk 10 contracts, these are account making trades for people that have under 10 grand in their account, and risk 1,300, you could have again made 30% of your money. If you had $10,000 in account and risk 1,300, you could have made 400%. Again, this is the momentum. It was to the downside. Boom. It was a nice move. It was a beautiful move. Okay? So again, we're trading momentum. This isn't trend trading. The stock got sold off. Okay? Who knows why? Any questions about that? So again, the Options Newsletter is a subscription service that I send the trades get emailed to you. The room is different. I day trade in the room. I'm not doing options in the room. I'm calling the trades live in the room where we're day trading. I'm saying the entry, the exit, and you're getting it out with me if you're doing it with me. I'm doing fast day trades. I'm holding options longer. It's whatever works for you. Some people have retirement accounts. They cannot day trade. They cannot short stocks. They can only buy a put. A put is a short, okay? But again, it's the same philosophy, the same system. It's the same Golden Gap system. It's the same rating system. And Golden Gaps have huge opportunity because they spot power money. Any questions here about anything I just said? How are we doing? Okay. So again, there is only one thing and one thing only that can move the direction of a stock. It's money. And not a little bit of money, but a lot of money. More than you could even possibly fathom. It's what I call power money. Power money is in charge. Power money is in charge of the stock's direction. Trends are set and moved by the power money people, of which there's a lot of in the market. A ton. Okay? More than, again, you could even fathom. What alerts me that we're about to drop? Again, I see the gap. And then I go through my 26-point rating system and I rate it. If the gap rates 20 points or more, I take it in the direction of the gap. And again, you're talking about if we do a put, Rick. We've done some calls this week, like NVIDIA was a call. Like, how did I see that would rally? Same philosophy, but in reverse, okay? Same idea where I'm rating it and going through the rating system. But gaps happen in the market on a regular basis. Literally thousands of gaps every day. So finding gaps isn't hard. It's finding the good ones. There's more that aren't good, if that makes any sense. Do you know what I mean? So you could have gone long other stocks, this week besides NVIDIA. But that was the big trade to the upside. So again, you want to try to put your money and get your most bang for your buck. Do you know what I'm saying? And so we want to try to find the ones that are going to have the biggest momentum. And again, I prefer to short, but I will go long. Like, I just went right to that NVIDIA gap, and I said, this is going to go. And we did it. So, however, some gaps are better than others. Some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. Again, we've talked about some of these. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. And things can change. Things don't stay the same forever. That's how you know when the power money will flow to pay you. Again, things can change on a dime. It's very important for people to, again, also exit when you're up. Because you could be up money in a trade. You could walk away. You could look away. You could have a Fed meeting. You could have Trump tweet something. You could go to bed and be up a lot, and then boom, you're down. You've got to book profits. This is not holding it for forever and ever and ever. Again, momentum trading means taking it, getting in, letting the momentum carry the trade through, whether up or down, seeing the profit in your account, and then you exit the trade. Remember, it's never over to the fat lady sings. You got to get out of the trade, and the money isn't yours. And I don't hold trades till Friday if I'm up in them. For Friday expirations, I don't do that. If I'm down, I'm holding till Friday. It's very, very rare I would hold a trade until Friday that I'd be up in. I'd have to be so far in the money and so up so much in there in that trade, I still don't think I would hold it. It's very rare I would ever do that. But getting back to the strategy piece, you need a foundation to trade. You need an infrastructure for every entry, and it's a strategy. That is why I'm doing the trade, okay? The strategy is a core reason behind why you're even watching a stock in the first place, or even contemplating an entry to trade in it. And entering a stock should not be taken unless the trade has a foundation supporting it, okay? And the foundation for me is gaps, and it's a very important foundation. I'm only trading gaps. So again, a stock gaps when the opening price today is different from the closing price of the previous day's trading. A gap is a break in the price action from one day to the next. So here's the BA. Rick wanted to talk about it. I looked at this morning. This gapped very late. I wish I had done this out of the gate. I didn't see it till later. It flipped literally seconds before the gap, seconds before the open. Really kind of weird, but it's still lower. So we did a late trade in this, Rick, but it's lower. Anyway, I also wanted to wait out the Fed here today at 2. Anyways, here's the gap, Rick. This stock closed here, gap down. It's a daily chart. I don't think you understand what a gap is, Rick, and you're on the newsletter. Again, I know you're going to do the class at some point, but this gapped. Do you see this? This closed yesterday here and gap down. This happened within like 60 seconds. So I saw it in the morning, but it wasn't doing this, to be honest with you. At one point, it was gapping up, actually. So I got off this and got on NVIDIA today, and we day trade NVIDIA. But I saw this later, and I waited till after the Fed said what it said, and I didn't want to get in anything until the Fed did what it was going to do. And the Fed pretty much was a bust today because he didn't give any guarantees that they're going to drop rates in December. So the market didn't like that. Market sold off hard when he said that, actually. But this is still lower. But I would have loved to do this out of the gate. But we had other stuff to look at today. But this is still lower. But this is a gap. This had earnings today too. Okay. And we would have done a higher strike if we had done this out of the gate. I would have done the 220s. But this is still lower. Now, what if you're a beginner? You're brand new. You don't understand anything I'm talking about. Well, that's the point of doing the class. That's the point of doing the class. You learn it. People trade better when they know what to do. It's just a fact. Again, it's sort of like, everyone wants to just trade and make money. When I take a trade, I believe it's going to work. You won't understand that if you don't know what to do. And so it is a big piece of it. And that means doing the class. And it means, taking a weekend off when you would normally, be with family or whatever. I get it, but it's time for yourself. It's time to really focus on yourself and pursuing this dream if you really want to do it. And even if you're a beginner, if you knew you never traded before, you can learn it. I'm not betting. I'm predicting that the momentum continues to the downside. It's already continued to the downside. Yes, huge selling momentum in BA, correct. But normally I would have done this out of the gate, but it wasn't gapping when I looked at it. But it did gap before the open. I just didn't go back to it. But I probably would have if I didn't have anything else to do. But there was like a trillion things this morning. And I needed to trade, and I needed it early, and I got the NVIDIA. And if I hadn't done that NVIDIA early, I wouldn't have done it, because that NVIDIA went quick. Okay? Now, again, I've been talking about this too, chunking it out. Rick, I've been talking to you about this. You take the trade, get the move, get out, because you're going to take another trade, or you need to take another trade. If your money's invested in a trade and you're waiting, you can't do another trade. Again, I don't kill losers waiting, but if you're up in a trade, what's wrong with getting out with the profit? So you have the money to take another trade. Remember, if you're risking $500 and you're up $500, then you'll have $1,000 back in the account to take a trade tomorrow. You know what I'm saying? It's take it, get the move, get out. Chunk it, chunk it out. That's how you build up an account, particularly if you're starting out small and you want to get somewhere. Again, everybody has a different sized account. But even if you had a lot of money, you still got to book profits. You still got to chunk it, okay? Anyways, the system I use to find the right gap each day is called the Golden Gap System, which I developed, and it's a checklist. And I rate the gap every day. I go through 26 points. If it rates 20 points or more, I take it in the direction of the gap. And again, I prefer to short, but I will go long. Here was a huge trade. Now, if you're like, I don't want to do this as a margin trade, which we did, we do puts and margin trades in some of these things. I don't always do them in both, but this was a day here, the 22nd. This is the market. The QQQs closed here, gap down, fell off a cliff. We day traded this here, and you could have done a put in it too. So I like to do both sometimes. Now, if you're like, I don't want to do a margin trade, this is crazy expensive, I get it. You could have then just done the put. But this was an awesome trade, okay? So I added in it, which is an advanced concept. If you're in the room with me, you can do this. If I feel it's going to go in my direction and go even bigger, then I lob onto it. And I doubled up in this, and I let it ride. And it actually even went down further. But I had a good exit on this. So this is a margin trade to make this kind of money, $69,600. Could you make the same money in a put? Yes. But again, it's different. When you are shorting at a certain stock price, and again, this is why I like to do day trades. People always say, well, why don't you do everything as an option? Because day trading is different and can be very profitable. Because if this drops $9 almost, which it did, then penny for penny, the shares I have will be what I make. When you take an option, I'm just making this up. I'm just going to make this up here. Say you buy a put and it costs $1. If the stock drops $9, that may not necessarily be worth $9. Do you know what I'm saying? If it takes a week to happen, it won't be worth that. Do you follow me? So the faster it moves $9, the more chances and likelihood you'll be up close to the amount of the move of the actual stock price. But if it takes days and days and days and days and weeks, depending on when you did for the expiration date, you might like actually have a move in the money. Like I'm just making this up here. If you bought the 609 puts, something could go to 600, but if it's the last day of expiration, you might be flat. You might not be up anything. Like that's happened to me where I got it. I got the trade right. I got the call. I got the direction right. I was in it, and I might get out of it with a teeny weeny bit of profit. And you're like, how could this be? This is in the money, but it's the last day of expiration. It took forever to go. You know what I'm saying? Like that has happened to me in all the years I've traded. Option value changes over time. Absolutely. I don't know if that's a question or you're just stating a fact, but that is true. So again, if you short a stock, and again, I'm just making this up here, if you short a stock at 609 and you exit at 608, you made $1 if you have 1,000 shares. If you buy a put at 609 and you exit it at 608, again, I'm just making this up, if you did that here in this day, you would not necessarily make $1,000 in the put. Does that make sense? But you say, well, then why are you doing options at all? Well, some things are very expensive. The market is expensive now. And also, I want to hold overnight. So if I can hold overnight, I will get bigger moves. Again, we went long the market here, and we had a bigger move here. Boom, kept going. Did calls. But, you know, we've also done shorts in the market too. But here was the 1 minute on this particular day. Stock closed here, gap down, dropped, rallied, fell off a cliff. Again, what's happening here? Selling. So it's hard to believe that this did this day, looking back now where the market is, but this is October 22nd. It was like 2 weeks ago. It's crazy to think about where the market is now with this. But we shorted this. And again, if you're like, I don't have a margin account, I can only do puts, you buy the put. Buy it and ride it out. Whatever you make, you make. If it's 50%, if it's 70%, whatever it is, it's money. You have to take the type of account you have and the type of money you have and risk what you can and make money and go from there. And you learn it as you go and you process the information and get good. Any questions so far about that? I see some regular people there. Balvinder, Andrew. Andrew, I thought you said you can't do the class right now. Let's see, Andrew, I think it is. Ed, I don't know how you're doing. Dan, I talked to you. Jesse, you've been following me forever. Ken, you look new. Peter, you've been following me for a while. I don't know if you're ready. Robert, you look new. Terry, you've been around for a while. Tracy, you look new. And Will is a member. Anybody want to ask me anything? Everyone know how to chat? You go down to my name, choose my name, and then type in the room. That's how you do it. Oop, there's Tracy. Do you have to ask for margin? Do you have an account set up right already somewhere, Tracy? If you didn't set it up as a margin account, yes, you will have to set it up as a margin account. You will have to fill out forms and you will have to set it up, correct? Unless you did when you set it up and you don't remember it, but I would think you would remember that you did that. Just like if you're going to do options, you have to set it up to do options too. You have to answer questions and things. You're going to have to go through that process for any type of account you have set up. If you didn't set it up as a margin account, you probably have 2-to-1 margin or it's on cash. And if you didn't set it up to do options, you probably can't even do options at all. So whatever you want to do, you have to set it up. It's very simple. Phone call. They will walk you through it. Okay? And there's prop accounts out there now. People can use and trade with prop accounts. So again, we were talking about thinking and learning and all this stuff. Again, you have no idea how powerful your brain is. Like my brain developed this system. Like I have a very good brain. It developed the system that I do now over 3 years. My brain developed the system. And I've been using it now for 18 years. That's a long time. And now I'm teaching other people. I mean, you know, you have a good brain too. You just have to train it to see what to do. And I'm so ingrained the way I've trained my brain to read charts that I just instinctively act. If any of you have watched me trade before, if you watch any of the trading room videos, I just see it and do it. It's like there's not a lot of time between me thinking and processing it and doing it. It's a knowing because it's just like in my blood now. And again, I think one of the downsides of traders, they're all over the place trying to jump from thing to thing to thing. They never get good. They never get good at one strategy or system. They're always jumping around and they never get good at anything. And then they don't see the longevity in doing it. And they never really get anywhere with it or make money. And then they spend a lot of money on classes and jump from thing to thing to thing, wanting the next get rich quick thing. There's no get rich quick thing. Again, it costs money to do my class. You have to learn it. You have to do the trains. But again, it makes sense. You know, again, when you do the class, when I explain everything in the class, it makes a lot of sense. So again, this isn't without, you know, it's not something that you can't wrap your head around once you do it. It's not like, this isn't like, you know, you're not like a surgeon here. It's not like you have to go to medical school for 12 years or something in residency. You can learn what I know in a course of 2 days in the class. Oh, you're a doctor? There you go. There you go. Again, I think people, you know, they jump into trading and they kind of had a gambling mindset. Step back from that if that sounds like you. You can't be like that. You need to be patient and thoughtful, but then you also got to hit it when the trade's there without fear and take the trade. Yeah, I'm sure it was long and expensive. Even regular college. My nephew's going to school next year. He's going to college. He's graduating. The cost of universities now is an insane cost for parents. Again, I don't have kids. Back in the day, parents used to be able to mortgage your house to send their kids to school. You can't even do that now. I mean, it's like it's just the cost of college tuition has gotten so out of hand. And that's not even going to, you know, graduate schools or schools after that. I mean, pretty much everybody is looking for a way to make extra money. So even if you're like, I love my job, I don't want to trade for full time, I just want extra money on the side. There's nothing wrong with that. Again, we did that in a video trade. We were done in less than 10 minutes. You can trade quickly in the morning, be done. You can get the options trades, put the trades on, put a sell order. You don't even have to watch it. If it hits, it hits. If not, you're in it till the next day. Then you look at it at night when you get home from work. You check it at lunch. You know, there's so many ways to make money in the market where you don't even have to sit and stare at the screen for 6.5 hours. And again, I don't do that. I'm here doing work. I'm doing stuff. I go out in the park. I'm doing a lecture now. You can find a way to make it work with your schedule, you know, your lifestyle, whatever that happens to be. But anyways, once you learn how to find momentum making money, it's not hard. It's just not hard. It's just getting to that point. You know what I'm saying? Where you know what to do. Any other questions here from anybody? So this was the big trade though, the big short, which was Apple. Again, this was the same day we had the market. This was the exact same day, 10:22. So again, stock closed here, gap down, open, fell off a cliff. And again, you could have done this as a margin trade. You could have taken less size. You could have done a put, okay? Again, I like to do both. But we shorted it at 260.95. I added at 260.55. I added again. Again, long story. I'm not going to get into why I kept adding to this. This is a big position in this stock. You got to have the margin to do it. But look at the move. So the average price was 260.50. So basically it fell almost $5. And this is the outcome. This is like the short of the month for me. But the month isn't over. We got 2 more days in October. Now, again, what if you risked less? Still would have needed a margin account to do this. But if you started to trade out risking 1,100, if you could take 2,000 shares at this price of Apple, if you added with me and doubled up again, you could have made $37,600. This is this day here. Again, we're talking about momentum. We're talking about shorting. Again, how do you make a lot of money? You're playing this, and you're getting in very early. So we were in near the high to get the drop. Boom. See it? I'm not chasing this in the middle. So I got to be on top of this thing, get it, boom, get the drop. And we did it. And I saw it was going to break 260. So it was just a beautiful trade. Here it is. Here's the 1 minute. Here's the 1 minute chart. Stock closed here, gap down, open, dropped. This is 9:30, boom. That's a 1 minute. So again, I trade in the 1 minute chart when I'm day trading. I make the decision and rate the gap with the rating system on the daily. Okay, so this is how I'm making the decision to do the trade on the daily, but I'm taking the entry on the 1 minute. Well, this was not a quick trade. This happened over. I held it. Some people got out. Some people did the trade in the room and got out quick. I didn't. If you wanted to hold it with me, you held it with me. But some people got out of this quick. You were up, you could have got out quick. But this is one I thought was going to continue down once it broke 260, which it did. And we had the market with us. That was the other reason I held this. So remember, 1022, market sold off. This sold off. So again, I don't hold normally. No, I don't. But I had the market with me. The market power trend did the downside that day. And so did this. And Apple's a market stock. Okay? Goes in the bucket of market stock. So again, gaps are a very specialized strategy. That's all I do. That's all I do. Again, I prefer to short, but I will go long. So it's about getting a daily focus, and 1 pick a day is all you need. If I do more than one thing, it's because I have a reason, or there's 2 really good gaps and I don't want to miss them. If you want to make money in the market, you need to think and act like a true professional. And this is true even if you're trading only part-time. Okay? So again, even if you're trading only part-time, you have to think of it like you are doing this full-time. Like that this is your job, your life. You have nothing else, like 100% focused. And that's how you have to, close your door to your office. Don't let the kids distract you. Turn off your phone, whatever. Don't check your email. Because again, you could very easily get distracted and then poof, you missed your exit or you missed the entry. I had a girl today, she didn't do any video, she missed it. I said, just grab 100 shares. Just take 100 shares, get it. I mean, it just hit fast and it hit big. So remember, professional traders have specialized strategies, systems, and reasons for taking trades. That's where you need to think. Again, even if you're doing this for a very short time, you got to focus on one strategy, be effective and efficient. And for me, it's gaps. And I also, like I said, prefer to short. But every day I'm looking for stocks to trade that have, number 1, a high probability of directional bias for the entire day, preferably. 2, big move in the day. 3, early confirmation of my bias and the move between 9:30 and 10, which of course I got today with NVIDIA. And I'd have got high with BA, except for I wasn't watching it out of the gate. Precise entries with follow through. And a good risk to reward, which we had with the Apple, which we had with the market. Again, I want to see a decent target. All right, I want to do it. But the whole philosophy behind my system, behind my Golden Gap system is to analyze a large time frame to make the trend decision on the directional bias for the gap. And all large traders of every kind look at large time frames to make decisions, particularly institutional traders. So to make entry decisions and exit decisions based on a small time frame, like I said, we're on the 1 minute for the entries. It has a very high degree of focus and accuracy, and again, you gotta be fast. If you're not that fast, then you can do the option, because the option may not move as quickly as the 1 minute for the day trade. Although if the stock moves fast, you are going to pay more for the option, okay? Using the daily chart to make the decision for the stock pick allows you accuracy in the direction, which you got to get right or you're going to lose. If the stock falls and you're long, you're going to lose. If it rallies and you're short, you're going to lose. You got to get it right. Using the 1 minute chart allows for good risk-reward trades with accuracy. So again, everything I do is based on the 26-point checklist. This is what I teach in the class. This is the meat and potatoes of everything with everything that I do. Again, I teach a class once a month. There's only 2 more classes this year. I can't believe it. One next weekend, November 8th and 9th, and then one in December, and that's it. I can't believe this year's almost over. It's crazy. But I've been doing this, like I said, for a very long time, and I have never changed what I've done, actually, in all that time. It's kind of interesting. So, you know, again, when you find something good, you don't need anything else. A lot of people are like, oh, I want to do Forex, I want to do Bitcoin, I want to do futures, I want to do day trades, I want to do options. When you find a good system, you don't need to do anything else. So over the years, I've just added more and more risk. And maybe I'll add on to my risk next year. I'm not going to change it now. It's too late in the year. But I might. So as you do well over time and you get good, you can increase your risk. But the system itself, for me, has never changed. So the success requires a plan. And for me, it's the ratings. And then I get up and I rate it. And if it rates good, I do it. It's like if you're going to, you know, fly a plane. If you're the pilot, you go through a checklist. If you're going to perform surgery on someone, again, if you're a doctor, you go through a checklist. You're an accountant. You're going to do your tax return. There's a checklist. Things have to be checked and marked. Did we get this? Did we do that? The 26-point Golden Gap rating system helps you pick which stock to trade each day. And that's how I do it. It pinpoints ahead of time which stock will have the move in the day with volatility to trade and momentum, and that's how you make money. Having a checklist keeps you organized, extremely organized. I like to write things down and I write everything on a piece of paper. Write my targets, write my resistance, write the rating. Having a checklist forces you to look at what you should be looking at in a chart and a stock to make the correct decision rather than watching the news or getting distracted from TV or things that people are saying that can get in your head and make you crazy. Politics too. Having a checklist helps assist you with directional bias, and having a checklist keeps you on track to reach your goals. You want to reach your goals. A checklist is a plan of action, and everyone that puts money into the market should have a plan of action and checklist. On a professional level, all high-income career field specialists have checklists. Would you want to go in and have someone perform surgery on you without going through the checklist? What if you weren't supposed to eat and you forgot and you ate? I mean, what if a million things? What if the doctor didn't ask you if you want a certain drug and they gave you a drug that made you sick? These are just, it sounds so commonplace, but these are things that just make sense when you think about it. You're going to risk money without like any thought. You're like, oh, well, so-and-so, Kramer said this is a good long because it had good earnings. No, there's just so much more to it. You know what I'm saying? Any questions here? How's everyone doing? So again, why are gaps so profitable? Large institutional money. Gaps are created with the large institutional money. That's what makes the gap. The professional gaps that happen and play out in the stocks are formed by one thing and one thing only. Again, they could be buying, they could be selling, but it's large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap. Because again, Nvidia gapped up and could have sold off, and then I wouldn't have done it, but it didn't, okay? You have to find the way to play it and then confirm that the large money will flow with it. So by having a formula to rate and qualify the gap, you get confirmation. That's what I'm getting, that confirmation, which I need. I don't want to waste my bullets. My bullets is my cash. So I get the confirmation, and then that gives me the conviction that the large institutional money is on my side, and then I take the trade. Gaps are an event. And they happen a lot, but there's not good gaps every day, I'll tell you that for sure, in every stock. But when you see a good one, it creates a sense of urgency, and thus an action is being forced by participants of the stock. They'll either go long or they'll sell it. This is why gap trading is incredibly powerful. Trading gaps is a powerful and profitable way to trade because you're trading on the side of power of money. That's what you want to do. Okay, Dan is good. Rick has a question. How do you narrow it down with so many stocks to choose from the 26-point checklist? Without getting in the weeds here, I scan very quickly in the morning. So I don't rate 1,000 things. So I'm scanning and then I'm saying no, 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 maybe. And then I write down the maybes. And then those are the ones I'm rating. So again, there's more no's than yeses. So I can just visually scan and say no to like a bajillion things. So that's why it doesn't take me 10 hours to get ready. Otherwise, I'd never sleep. And again, I don't read earnings reports because I wouldn't have time to do that anyways. And it doesn't matter because you could have a great earnings and the stock could crash and vice versa. So it's about the directional bias of the gap itself. Again, bullish institutional money signifies what? It signifies buying. I mean, you can't look at the market. This is last Friday. It was like around 6:15 or wherever. Went poo. It was up 10 points. This is Friday night, Monday morning. Boo. It went. There's only one way that happened. Big money came in and just bought it. Sunday night into Monday morning. Again, this closed like this Friday. And people went to bed, and then poof, it went. So you only have a gap like this that goes like this, gaps up and closes like a solid fat green with big money buying it. And then what about bearish institutional money? Which is, of course, what I love. Again, BA is a good example today because I don't even know what the earnings said on this, but it had earnings closed up here. It's like around 223 and change. Gap down under 222 and sold off. But this was a weird one today because it was up. It was up here, and then it opened lower. But people dumped it. Again, why? Who knows? Who knows why? Who knows? So again, a lot of people waste time trading, waiting for moves to happen. They do all kinds of different things. They don't get anywhere with it for years and years and years, longer than I'm even alive. It just makes no sense. You know, once you gravitate and find something that makes sense to you, you got to throw yourself into it. You got to do good. You got to learn it. You got to get under your belt. Again, it's not about risking big size. It's about risking within your limitations, which everyone has. Even hedge funds have limitations. Otherwise, it can blow up. I mean, you hear banks fail all the time. Banks can fail. They don't follow within their own limitations, too, of lending or investing their money. Everybody, rich or poor, has guidelines that they have to follow. No one's any better than anybody else or less. You have to be disciplined about how much you risk. But if you're good, you could take a small risk and do well and build it. And if you have more money, then it's even better. You know what I mean? But it's getting to that point of realizing that the market can bring you financial freedom, but you got to learn it. And personally, learning is fun. I mean, it depends who you are, your different opinion about things. But some people, I think it's a drag doing a class. But that's not someone that's going to ever end up doing well because, again, understanding what to do is really counts. It's a difference between making a lot of money and losing. It's a difference between holding the trade to a bigger target or killing it and making it a little. It's a difference between holding a trade that might be down till it goes, where you understand what to do. So knowing what to do and when to do it counts. And again, take it to the fact that learning can be exciting. This is a new adventure, and it's going to be exciting for you. I try my best to make learning exciting. I think I try my best to make trading in the room exciting. But again, people want to make money. And so that obviously should be the motivation. The motivation is you want to do this and you want to be successful and you want to make money. Therefore, you're going to learn it. The motivation to learn it is because you're motivated to make money. Tracy, I don't want to get in the weeds about broker stuff like that. I would call your broker about it. But basically, you can set up an options account. You can set up a margin account and set up your options account as a margin account. Or you could set up an options account as a cash account. If you set it up as a cash account, you won't have the margin restrictions. If you set up as a margin account to do options, you will be cut off and flagged if you take, I don't know if it's 5 trades in 8 days, or I don't even remember anymore, if you don't have the 25,000. But we are buying a put to enter, and we are selling it to exit. You are paying the price that you are risking if you have it set up that way. So if it costs $1,000 for 10 contracts, that is what you're paying to buy the put. And if it goes in your favor, when you exit it, you will sell it, and maybe you make $500. But again, you can set up an options account as a cash account, which gives you more flexibility, or you set it up as a margin account if you have more than 25,000. But if you have less than 25,000, they're going to flag you. Again, I forget what the things are. It's like five trades in 8 days or something. I don't know. So it's just easier to set up as a cash account. But if you're going to trade on margin, just set it up as a margin account. Then you could trade in the same account. Okay. Again, these are questions that you have to ask your broker, and I don't want to tell you the wrong thing for what works for you. Some people have a retirement account, and they cannot short. You can't short in a retirement account, but they can do a put, and you still have to set it up to do options, even if you have a retirement account. And you got to make sure the place that you're trading at allows that too. You have to ask them. So having the right information to know what to look for makes a world of difference in your trading. You have to have the right knowledge and focus. How are you going to do that? How are you going to get the right knowledge and focus? Learn it from an expert. And in this particular thing with gaps, it's me. Time is just so precious. I just got done saying I cannot believe I only have 2 more classes this year. It's almost the holidays. Halloween is Friday. It's shocking that Thanksgiving is less than a month away. It's just like, really, time has been flying by this year. This is a nice testimonial from a student. Any other questions here from anybody? We're finishing up. So if you'd like to trade, you can sign up, you can join. Again, I've been teaching people my system and method since 2012. So what you learn in the Golden Gap course, you will learn the 26-point checklist, you will learn the rating system, you will learn how to enter the trade and exit the trade. And it's extremely important to learn the rating system. You'll learn how the entries too. And again, you'll learn technical analysis and chart analysis on a very advanced level. You'll learn to read support and resistance targets. And again, you can do it yourself. You don't need me. But I think people love the room because I'm calling the trades live. But you shouldn't need me. I don't hold anything back in the class. You'll learn it all. So empower yourself today. The Golden Gap course is a complete system to use to trade. And again, the class is November 8th and 9th. It is a full 2-day course on how to strategically find, pick, and place stocks that are professional bearish gaps. Class is online. You can be anywhere in the world and take it. Cost of the class is $6,999. Again, Saturday and Sunday, 9 to 5. We have a 1-hour break for lunch. If you want to sign up, you can email me. And I'm doing a Halloween special. It's a townhouse in New York. Look at that. Halloween in New York is so fun. This is going on through Halloween. If you sign up by Friday, Halloween, October 31st, you will get the trading room and the options newsletter free to the end of next year, which is huge. This is a great special. So even if you want to stay on trading with me, you wouldn't have to renew until January 2027. Long time, lots of trades. Some people have already joined, have been trading this week and made money. We've just been on fire here. There's been a lot of opportunities, and it's earnings season, so that's part of it. But again, what's happening in the market with the tariffs and all of this is opportunity if you know how to trade it. So it's a class on how to find, pick, and play professional bearish gaps. Any questions? Anybody want to go back? Another testimonial from Bill. Any questions about the special? You must email me for forms if you want to join or sign up. Again, some of you were following me for a while. Some of you are new. How's everyone doing? Well, I think the people that joined before this week definitely had an advantage because we had a lot of big trades this week. It was just, you never know. You never know. It's the luck of the draw. We could have a big day tomorrow. You never know. Like, you never know when you're going to get the big ones. That's why you have to participate. You have to be active. Like, I don't know what I'm going to do tomorrow. I have no idea. I have no idea. But I'll get up tomorrow in the morning. I'll go through my process. I'll rate the gap in the morning. You know what I mean? Dan said good. Balvinder is asking for the payment plan. No, because you do the class, you get the information. So you have to pay before you get the information. However, you can put the payment on multiple credit cards. I've had people pay on up to 5 cards, as long as they pay the same day, the total cost of the tuition, which is $6,999. But once you take the class, you have the information. And you're getting a lot of trading room time and options newsletter. And again, the idea of the credit card's the payment plan. You know, you can pay over time on your credit card. You pay interest on the credit card and pay over time. Rick has a question. What do you mean, why do I put out 4 different strikes? I don't put out 4 different strikes. You lost me there. I don't know what you mean by that, Rick. Tracy's saying, thank you to some people take it more than once. You only get 1 class per payment. So like if you paid for this class and did November, there's no free retakes, if that's what you're asking me. Now, what people usually do, and probably will do this year, people that did the class last year in 2024, in October or November and December, that got some kind of special similar to this, will renew for 2026 and probably then do the class in December again, but pay, you know, and then pay the $69.99, do the class again a second time, and then get whatever special I'm doing at that time. Like if somebody decided to do that now, they could do the class a second time now, pay the $7,000, and then be in the room all next year and get the options newsletter. So that has consistently happened over a number of years that people do it. Does everyone do it? No. Some people just renew the room or the options. And again, once you're in and you're a member, I do specials for the holidays for members. But there are some people that want to do the class again, and then they just take advantage and pretend they're a new person, and they get the special, and you're allowed to do that. So yes, I've had people do that. I probably will have people do that might have done it twice already, actually, that just want a refresher. Again, learning is very important. You know, it just helps you. That is not strikes, Rick. That is support. That is not strikes. The strike is listed on the letter. I thought you knew that. Rick. That's concerning because you've been getting the trades for like 2 weeks now. But do you understand that now? The strike, there's only 1 strike. I put targets, I put support and resistance levels, whether we do a put or a call. I put notes sometimes. Is the live trading room available every day? Monday through Friday, yes. Yes, there are specific times. It opens at 9 a.m. You got to be there by 9:20 to get in the room. And we trade between 9:30, 10 a.m., maybe 10:15. That's when we do it. It's only the morning. The room's not open all day. So you're basically there for an hour. Maybe we go to 10:15. Do you understand that now, Rick? About the letter? Then there are people that don't take the class more than once. They take it, they got it down, they're in, they learn it, you know, and they do it, and they're fine, and they get it. And they've been trading for a long time, but they had no clue what I was doing. And they just do the class, and then it just gels with them. They take the trades, they're experienced traders, and they get in and they do it, you know. So again, it's everybody's different. Everybody's different. So I talk and teach in the room. I answer questions. I'm there every day in the room. People can answer questions, whatever they want every day. It's not like people have to do it more than once. They can go back and ask me questions whatever they want to, you know. But again, having the free trading room time to the end of next year is huge. Plus the options, it's a lot of trades, a lot of trades. Again, it's an investment for you, but you shouldn't be rushing to pay it off immediately. You should be invested in learning it and doing it, and then you don't have to worry about any renewal or anything until 2027. So you should be able to feel relaxed. You can focus on learning, starting slow, trading, taking your time. Can someone not take the class and still in with you watching the trades? The live trading room is the class, the Golden Gap course, is a prerequisite to join the live trading room. So to answer that, no. If you want to do options, you can join the options newsletter without having taken the class. There's no prerequisites for the options newsletter. That gets your email. You're not doing the trade with me live in the room. The room is a day trade room, and you must take the class to be in the room. The trade set up too fast, too quick. I just told you, one of the girls this morning, she did the class and she wasn't focused and poof, it went. You need to know what to do to be in the room to get those room trades. But the options newsletter, you just want to do options, sign up for the newsletter. The newsletter is $49.99 for 6 months and $69.99 for 12 months. That's a subscription price separately. And again, that's why this is such a good special. Rick signed up for the 6 months. Rick's here. Rick signed up for the 6-month subscription. He has not done the class. But Rick emails me a lot of questions. I answer them, but I know Rick probably, when his subscription comes due next year in 2026, Rick's probably going to do the class. Rick did the NVIDIA, and Rick got out, and Rick's had other questions about things. So again, you do what you can afford at the moment you can afford it. Balvinder, email me then. I will send you the forms for the options newsletter subscription. If you just want to do options, it's fine. It's fine. It sounds like you did the right trade, Rick. If you did the 210s, it sounds like you did the right trade. So I think you're fine. Yeah. Well, Rick was emailing me yesterday about NVIDIA. Again, because Rick's new, and NVIDIA had a big move yesterday. I thought Rick should get out of NVIDIA before yesterday's close, which I'm assuming you did, Rick. And then you were upset when it was up this morning. But you should not be upset when you get out of a trade and you make a lot of money. How much did you make on the NVIDIA trade, Rick? I don't know how many contracts you did. How much did you make on that trade? Again, there were 2 NVIDIAs. Which one did you do? You only did one then. Was there a reason you only did one? Because I had called 2 strikes. Again, if you are new and you're only doing 1 contract a day, and again, we're talking about chunking it. I know, because you have a small account. I think you should be focusing on only 1. Yes. Yes. You can't be a pigger. You can't risk half your account. You can't. You have to just sit within your guidelines. Now you're in the BA. And if that gap's down tomorrow, guess what, Rick? You're going to get out of that with profit. You follow me? You take it, get the move, and get out. The move could be on the day or it could be overnight in the gap. But if you're up in that tomorrow, guess what? You should get out of that. And then you do a new trade. You see how it goes? And then you take it and you book it. And you wait for the next one. And then you get the next one. And then you take it and then you book it. That's what you have to do. That's what you have to do. It's the only way to get somewhere with this when you have restrictions. But I'm telling you, if you had all the money in the world, I mean, honestly, sometimes I feel like I've got a lot of trades on, and it's a lot for me because I'm doing other things. So, I mean, even I have said, gosh, maybe I need to pull back a little bit here. But, it's hard when there's a lot of opportunities. But, it's a lot to manage when you're in a lot of stuff. You might think, oh, if I had all this money, I could, do 25 trades and risk all this. You might not be able to even handle it, like mentally. Do you know what I'm saying? It's practice, 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 practice. You got to get good at it till it becomes second nature, and you'll get there. You'll get there. So Balvinder, email me. I'll send you the forms for the options newsletter. Tracy, I don't know if you had any other questions. Everybody else that was here, Dan, I don't know if you have any other questions. I know, it's crazy. It's only 2 more classes this year. Then it's going to be 2026. The December class dates I do have, because I'm not doing it around the Christmas. December 6th and 7th is when I think I'm going to do December. That's not in stone, but it's probably going to be December 6th and 7th, I think. Because New York's a great time to be in. The city's a great place to be in the holidays. I want to do stuff in the New York and the weekends too. Yes, Tracy, I don't want to tell you the wrong answers. I don't know the type of account you have with them. You need to call them. They will answer your questions. They're very good. Customer service there at Schwab. Get the information. You can email me. And again, I wouldn't be worried about, having to do the class more than once or whatever. You're going to do it once. You're going to learn it, and then you start to trade. And as you're trading, then you're like, oh, now I get it, and that kind of thing. Again, when you're doing the class, you're listening, you're taking notes, but then once you throw yourself into it, you start trading, you're like, oh my God, now I see it, now I get it. Do you know what I'm saying? Yeah, here's my email. You got to email me if you want to sign up for the sign-up forms. Anyways, it's a good special if you want to get in. Class is only a couple days away anyways. Yep. All right, excellent. It's chilly here in New York. We're getting a big nor'easter storm tonight. Chilly, chilly, chilly. I have the heat on. I'm going to let everybody go. Have a wonderful evening, and I will see some of you tomorrow. You're welcome.